All right, you guys, before we jump into the interview here, you know what we got to do. It is This Week in Freight, powered by my friends over at DAT. And again, all of the stuff that we break down on this segment, you guys, is 100% viewer submitted. All right. All of this is designed. I'm just trying to show you, to help you guys out on how I personally read freight markets, how I've read freight markets in the past. And again, so you guys can take this out there to your customer. So we're going to be breaking down the reefer market today. And again, if you want your lane broken down on the show, email my team, podcast@thefreightcoach.com. I just need pickup city, delivery city, and trailer type. But let's break down the reefer market here. And it's hot, kind of like across the entire board right now. So we've broken down a bunch of these lanes here since we started doing this, you guys. And right now, in particular, I want you guys to focus in on Florida. So we all know what's going on in the state of Florida right now. On top of it being the kickoff of produce season, flowers, and everything else going out there, and that's might have already kind of started to run its course. The state of Florida is heavy enforcement of ELP and everything, and non-domiciled CDL. So that is another contributing factor into that being a very tight market out there overall in the state of Florida. But, again, as we were talking about on the drive-in market, you guys, not all destinations are created equally here. So it's like, as we're going out there and really reading the market. So, I know it looks like everything is outside of Montana and Wyoming, everything is either neutral, moderately tight, or very tight out there. So again, you have to adjust your pricing accordingly. So I always like to look at the load to truck ratio as we're going on out there. And obviously, if there's 1,000 trucks for 10,000 loads, you guys know what that means, right? There's going to be exponentially higher pricing that comes along with it. But again, you need to pay attention now more than ever on certain areas that these loads are going into, and tying that into the ELP enforcement and the non-domiciled enforcement that's happening. So, obviously there's a lot of stuff going on in South Texas and essentially follow that border. And that's where a lot of it is happening. And it's not like a lot of these drivers are, I'm not saying any of them are, not running legally, but they don't want to deal with it, right? They don't want to deal with being stopped at a scale and jumping through all of these hoops. So you need to deliver a lot of this information into your guys' customers as you're quoting this stuff out. And then especially right now, you got to follow that produce belt. All right. What do I mean by that? Everything, it's already starting in South Georgia and it's already into the Carolinas. And that normally is where the produce belt rolls up into, right? So it starts in Florida and it works its way up the coast. And a lot of those areas are already tight. So if you're in a spot market situation with your customer right now, you're in a very strong position, right? Truck in hand, this is what we need to move this load today. But if you're contracted, hopefully you have line haul plus fuel, because you do get that added relief to it, to your overall price when fuel is up as high as it is out there. So that kind of helps you weather some of those storms. But, understanding where the market is as a whole, and you need to be able to deliver that stuff to them, right? Because most shippers, they don't have all the information. This is why they hire transportation companies, right? This is why they hire brokers and carriers to come in and help manage their transportation, because you need to be able to explain to them certain markets, the seasonality of these things. And this is why it's so important to use one of these tools, all right? Like we use RateView all the time on the show, and we've used it in the past, but I wanted to take a different direction here so you guys can check out this heat map. And again, look at the inbound markets here. If that's flipping things for your guys' customers, sorry, I'm going to try and zoom in a little bit here. Again, inbound and outbound across the United States for refrigerated is very tight or moderately tight in the overwhelming majority of the country, as a lot of you are probably experiencing if you're out there moving refrigerated freight. Now, from some of my friends, I've heard that, there's been a stabilization out there in pricing, but again, that doesn't necessarily change anything with your customers and your current book of business. So it's like, I look at these heat maps and I want you guys to go out there and actually understand what some of this means and deliver this information to your customers. All right. Like I mentioned, not all 500 miles are created equally out there. All right. Not all 1,000-mile lanes are created equally. And you need to let them know that, hey, at the end of the day, if this is going from a tight market into a soft market, that is going to be an exponential price increase, as opposed to, like if it's a loose market to a loose market, you might see some pricing relief out there. But overall, you got to pay attention to this stuff and get a little bit more substance behind that rate per mile that you're throwing out there to your customers. So again, this is how I read that market going on in the refrigerated sector. Again, pay attention to that, you guys, because inbound and outbound is tight. It's tight and moderately tight out there across the board, as you guys can see. Again, if you want your lane broken down or if you want any more information, email my team, podcast@thefreightcoach.com. We'll feature it on the show. I just need shipping city, delivery city, trailer type, and that is it.